retail, many people say, well, can't possibly hurt retail any more than it already has. I can tell you that's not true. So if you look in the United States, online retail as a share of total retail is roughly 20% now. It grew at 4 times the pace this year, or in the last year, as it did the prior 4 years. So 4 years into one. So it's close to 20%. If you look at S-curves, where does the sweet spot occur? It starts happening in the 10% market share, 15, 20, and then there's the takeoff. And given the coronavirus now, we're all much more comfortable shopping online. There were some who just wouldn't do it before. They had too much of a habit going or something. That's changed. And so I think anyone who thinks we're going back in time is mistaken. And of course, retail, financial services, energy, this increase in energy, that's almost what makes me feel good about what's going on. If you look year to date, energy stocks are up 37.5% and financials up 13%. Much of that occurred in the last month. 22% increase in energy just in the last month and 8% in financials. So that accelerated appreciation is what has caused this rotation, algorithm saying, okay, past is prologue, it's happening faster, let's get rid of our growth stocks and let's go into value. The fact that those two sectors are at the top of the league tables this year and in the last month makes me feel good from a couple of points of view. One, the bull market has broadened out. It did not narrow into one strategy like the internet in the late 80s. That was a recipe for the tech and telecom bust that we saw. So this rotation is healthy, a good correction, shakeout is healthy, great time to average in to strategies you like. And I do believe, on the other hand, that energy and financial services are going to be two of the most disrupted sectors thanks to electric vehicles, autonomous electric vehicles, and thanks to digital wallets. Those are two and three of the biggest opportunities brewing out there. So the fact that energy and financials are leading the pack suggests to me that this is not going to be long-lived. I'm happy they've had such a burst, and the other algo rule here is move from high valuation stocks to low valuation stocks. So again, be careful. A lot of low valuation stocks are going to be set up for disruption. And then there are rules like, okay, let's follow the price momentum. It's a Momo trade. And again, if truth is going to win out, that will be a losing strategy. So I guess the last thing I'll leave with you is a stat that I saw just today. It's cash in money market mutual funds. Now, cash in money market mutual funds soared during 08-09 for understandable reasons. There was so much fear. And of course, that led to sort of the deflationary, disinflationary period. I was surprised to see that cash in money market mutual funds, now maybe there's a technical explanation, but I don't think it can be this big, is higher now than it was in 08-09. It had started to come down, and now it's moving back up again. And I think this makes sense because, as I've mentioned many times, the equities have seen outflows pretty consistently since 08-09. There's been a flurry here and there, but pretty consistently. Fixed income has seen inflows. Cash is part of fixed income. These last 2 weeks probably has renewed the decline in equity outflows, and yet at the same time potentially a decline in fixed income, especially long duration fixed income funds. What do you do with that? we put it into cash. So that's very interesting. The cash is building on the sidelines, and we do believe there is going to be an asset reallocation. You could see it towards stocks and bonds away from cash. Bond yields have gone up. Let's extend our duration so that we earn a little bit more on our money. And for stocks, let's have a barbell strategy: bonds and equities, maybe even higher octane equities. So we're looking forward to sharing with you more videos like this, and probably focusing more on the exponential growth trends, just how powerful they are out there, how unstoppable they are if we're right, and the cost declines associated with Wright's Law are going to be as powerful as Wright's Law suggests. And then you will see how getting on the right side of change will be a very good idea. And not just in investing, getting your children focused on the right side of change, or your grandchildren in terms of their education and inspiring them, I think will become very important as well. So I hope you all have a wonderful weekend, and we will be updating these videos during this tumultuous time. We're going to be there for you. We want you to know what we are thinking.